So our next question comes from Cindy F. Cindy says, "Hi guys, my husband and I have owned a construction company for 30 years and we're finally selling. I'm 52 and my husband is 53. We currently have $50,000 in our high yield savings account, $150,000 in silver and gold, $40,000 each in a precious metal traditional IRA, and we also own a piece of property in a downtown area that was recently appraised at $671,000 that we own outright. We're going to receive $2,850,000 at closing. We'll have a note in the amount of $1,570,000 that will bear interest at 6% per year and will be payable in 30 equal quarterly payments of principal and interest, with the first payment due 24 months after closing. There will be an earnout up to $750,000 as well. We've never invested in the stock market, so we really want advice on how to make our money grow so we can retire by the age of 60. Robert, what a cool situation. I'll let you take this one first, but man, I'm just so pumped that people are able to spend 10, 20, 30 years. I don't know how long they've had this company for, but build it and work hard and just build into something so meaningful and then have this awesome payday at the end of it. It's just so, so cool. I'm just so pumped. So Robert, take it away.
Yeah, you always hear me talk that I think owning a small business, whether it's a service-based business or you invent a product or whatever it is, but I think it's the best way to wealth, because not only are you paying yourself along the way, but you get this big, beautiful payday at the end, as long as you understand having a succession plan in place and how to sell that business. And so this is just a really, really cool question by Cindy and her husband, and I love it. First and foremost, what I would do before that money hits the bank accounts, get some opinions from people that you trust. We have a family office, Crow Capital. If you want, I can set you up with a call with them. They'll walk you through all of your options and what you can do, but get 2 to 3 opinions. And make sure what you don't do is go to a friend of a friend that you didn't vet, you don't understand the numbers, you don't understand their fees, and just really find someone you feel good with and that you trust, because you want to make sure that this money is put out there in a way that matches your risk tolerance, but also that you understand what they're doing with the money. Because at the end of the day, this is a lot of money. You're coming up on retirement, so it's not just about how much you have, it's how much you keep and what your gains are, but also setting up the structure properly. Because when you have this much money, structure is important, because you want to have the right tax strategies. You want to have the right retirement strategies. All these things come into play. So certainly get multiple opinions, go with someone you're comfortable with. You could even split the money up and go with a couple different people if you wanted to. Sometimes people do that so you can keep people accountable for the performance. So that's what I would do first and foremost. That would be a lot of heavy lifting for you to try to take it all on your own. As much as we would love to help you, I think you need a professional with this much money to assist you and just really get you off on the right track.
Totally. I will jump in and do all the nitty gritty though. So 2.85 million, and you mentioned that you have this note of 1.57. So I'm assuming then that they're giving you cash of about 1.3 million. So that's 1.3 million in cash. I'm assuming that will be taxed as a long-term capital gain because you're selling a business and it's not like earned income. So just meet with the CPA to ensure that my assumption there is correct and understand what the tax liability looks like first and foremost on that $1.3 million sale of your business. Assuming, let's call it, 20% long-term capital gains there, you'll be paying about $250,000 in taxes, which will bring your, after-tax money deposited to your account to about $1 million. So let's just set that to a side, right? You have $1 million sitting over here. You mentioned that there's a $1.57 million note on the business, right? So owner's financing at 6% interest. If I did my math correctly, that should come out to about $72,000 paid to you every quarter for the next 32 quarters. So that's $72,000. I don't know how that's taxed. I'm not going to pretend like I do. So again, make sure you get with a CPA and understand, do you need to be setting that money aside for taxes there? Or is that I don't know, right? Maybe the 6% interest is what's taxed. Just get with a CPA to understand exactly. I think, again, that's the most important thing here that could go wrong is you get this windfall and you immediately go, deploy it elsewhere or put it in different accounts or with other people and professionals. And then you see a tax bill of $300,092 and you're like, yo, what's going on? I did my math wrong, right? So the biggest surprise, in my opinion, that might come your way is the looming tax bill, not just on this $1.3 million, but also the quarterly payments that get paid out to you for the next 8 years. 32 equal quarterly payments. This comes out to 8 years. The next thing I want to address is the 150,000 you guys have in silver and gold, and then 80,000 you have combined. So it's 150 plus 80. It's $230,000 invested in silver and gold. That's really cool. I'm not mad at that, right? Silver and gold have done incredibly well over the last, call it 18, 24 months, even outperforming the stock market. So congratulations on picking the right commodities. But again, they're commodities. They don't have earnings, they don't have profits, they don't have dividends, they don't have CEOs and management teams that can, make better products. You're investing and speculating on a commodity. I'm not saying to get rid of your investments in silver and gold. I'm not saying that at all. I have investments myself, but with this newfound fortune, right? Let's call it $1 million after taxes, and this maybe $250,000 a year that you're going to get paid now. With this newfound fortune, maybe it's time to, sit down and really begin to invest in the stock market for the first time in your life. You guys are in your early 50s. You have easily another 20 years of investing ahead of you. So, don't think that you need to preserve capital. I mean, you have 20 more years of investing. If I were you, I would absolutely put all of this money to work in the stock market. That might be in index funds, that might be in ETFs, that might be in maybe a public bond account as well, right? You can diversify the pot in such a way that allows you to have upside exposure in a meaningful way, right? Again, the S&P is up 25% this year. It was up 28% last year. Like, that is $250,000 a year that you're growing against this $1 million investment there that we had alluded to. So you definitely want to have that. But on the same token, it seems like you guys are very risk averse, right? You're gold bugs. You're people who think the world might be going down, and that's why you have the silver and the gold. And I'm super empathetic to that. So maybe there's a way where you could craft this portfolio to have a big slice in your silver and gold, and another slice in, a diversified basket of stocks, and maybe another slice in some treasuries, and maybe a slice in real estate. Maybe you guys want to get into some hard assets that you can look at and see and say, wow, this house or this duplex is making me, $3,000 a month in cash flow. You guys are very good at running a business. So what I'm saying is you're very analytical, you're forward thinking, and you're super, super on top of it when it comes to money. Now it's time to be the same, analytical and on top of it with investing. Don't let someone come in and say, hey, give me your $1 million, I'll invest it for you, don't worry about it. You want to learn what's going on. You want to know what they're investing into, why they're investing into it. They sat down with you and maybe they, want to have that conversation about what is your biggest goals over the next 10, 20 years as you inch toward retirement, and how are they deploying your capital in such a way to help you achieve those goals. So I know it's a little long-winded, but I mean, you guys now are sitting on what could be over $1 million after taxes, and you're in your 50s, and it's time to, for the first time, take that leap of faith into investing into American capitalism, hard assets, and things that make you feel comfortable. And you are absolutely on your way to be fully retired if you want to right now, but super duper retired with millions in your retirement accounts over the next 7, 10, 15 years.
I just really enjoy seeing people win and follow along the podcast, and we can go from our experience, give people all we've got to try and help them figure out, how to live their best lives. And it's just really, really exciting when we see stories like this.
And congratulations again, Cindy. And you and your husband, I'm sure, worked so hard to build this business over the last several years, if not decades. And this was your retirement, right? A lot of people think like, oh, my retirement, I got to invest and do this and do that. Other people's retirements are building a business or owning a diversified portfolio of real estate, or, there's a bunch of different ways to define retirement, which goes back to what Robert was talking about in a previous question. A lot of people don't know what they don't know, and they need to understand and have a plan of where they want to go. It's okay to have an untraditional retirement strategy like Cindy and her husband here. You just have to know what that begins to shape up as over a longer period of time.